Hello students, welcome back to our series National Income at Ease. So in the previous video, we have already studied the meaning of national income and the aggregates, wherein we understood what are aggregates, how to solve the numerical questions basis on aggregates, how do we do conversion of aggregates and so on. In this video, that is our video 4, we are going to study about the methods of measuring national income. As I have already given you all a little bit of hint in our previous video that national incomes are measured on the every financial year. Every financial year, we will be measuring national income. And what was national income? National income was nothing but the total value of goods and services produced in the country. This is what national income is. So yes, and every country measures its national income on an yearly basis in a one financial year. So same way, India also measures national income. It measures national income on a financial accounting period. Financial accounting period is your period of 1 year, that is from 1st April to 31st March. Basically, here we are going to see what are the different methods using which we can measure national income. This is what the entire topic talks about. So, let us move on and see what are the different methods using which you can measure national income. So, first and the foremost thing what you need to know is there are total 3 different methods using which you can measure national income. So, first is value added method, second method is income method, and third method is expenditure method. So total there are 3 methods using which we can measure national income. Okay, all the 3 methods are equally important. You are going to see the meaning of these methods, formulas. Somewhere you will also see the components and precautions. These are the important things for each and every method to know about. In the upcoming videos, we will be also solving few numerical questions based on all of these 3 methods. But as of for now, in this video, we are going to discuss the more major important methods of measuring national income. How you can measure national income using all of these 3 methods. So, one by one, we are going to see each and every method, starting with the first method, that is value added method. Here, with the name itself, you can understand what is happening. Here, every particular commodity we are going to calculate on the basis of the value which we are getting after every production of the commodity. For example, we will take a very simple and a small example. Say suppose there is a seller. Seller wants to sell bread. To sell bread, seller wants to buy flour. So, he will be buying flour from the miller. So, say suppose seller has bought the flour from the miller for say 200 rupees. And the final value of bread which he will be selling in the market is 500 rupees. So, this is nothing but the value which is being added to our final commodity. Bread is our final good and flour is our nothing but intermediate good, and bread is our final good. I hope you all remember what are intermediate goods, what are final goods, right? So, here very small example I have taken just to make you understand that when the price of final commodity comes out in the market, it will be inclusive of all the stages which the product has crossed. So, let us move ahead with this. Value added refers to addition of value to the raw materials, that is your intermediate good by a firm by virtue of its productive activities. So, this is nothing but a productive activity. In the economy, there is some kind of production taking place. There is increase in the production of goods and services. Value added is nothing but the addition of all the raw materials and all the other intermediate goods which are going to help the final product to get produced. So, this is the contribution of an enterprise to the current flow of goods and services. So, if I talk about 2022, all those goods and services produced in the year 2022 will be considered. So, this is what something is value added. Then this is nothing but the calculation between value of output and value of intermediate consumption. Value of output is nothing but your final good, and intermediate consumptions is nothing but your raw materials or other products which are going to be used for further production of final product or a final good. So, value added is simply nothing but value of output minus intermediate consumption. So, for example, here when we consider the example of a seller, wherein I said that seller wants to sell bread. Now, to sell bread, seller has to buy flour. He will be buying flour from the miller. So, say suppose he bought this flour from miller for 200 rupees. Now, he is selling the bread for 500 rupees. Okay. So, here if I say that find out the value added, then value added is nothing but the total value of output minus intermediate consumption. So, here total value of output is nothing but 500 rupees and intermediate consumption is nothing but 200 rupees. So, your value added will be nothing but 300 rupees. So, this is how we calculate value added. If you want to find out the national income by using value added method, this is the simple formula which we will be using to calculate the national income. So, here value added is equals to nothing but the value of output minus intermediate consumption. Value of output is the value at which the final product is being sold, and intermediate consumption is the products which we are using or which the seller is using for the production process. So, this is a very simple formula for value added. Now, there are two terms, intermediate consumption and final goods. As we have already discussed these two terms, intermediate consumptions are nothing but the goods which are being used for further production of goods and services or for the resale purpose, right? For example, I want to produce coffee. To produce coffee, I will be needing machineries. Now, these machineries are helping me to produce coffee, right? So, they are nothing but my intermediate consumption, intermediate products, whereas the cup of coffee is going to be a final good for me. So, coffee is a final good, machineries are my intermediate consumption goods. So, that is what intermediate consumption means. All those goods which are going to be utilized for further production process of goods and services are called as intermediate consumption. Or for that matter, if I am purchasing any commodity for the resale purpose, then that will also come under the part of intermediate consumption. Second is final good. Final good we know, as I said, coffee over here is nothing but my final good. Final goods are basically those goods which are ready to use. That means you can just go buy it and consume it. Example could be anything, chocolates, chips, hair oil, coffee which we get in cafes and so on. So, these are the two important terms which we have already discussed in our previous videos. So, just a sum up of the two meaning. Next, when we calculate national income using value added method, two things you have to keep in focus, that is related to import and export. Import means what? Import means when our country is purchasing goods and services from some other country. So say suppose if India is purchasing goods from USA, that means we have done importing of goods. And export means just the opposite. Export means selling of goods and services from our country to some other country. So say suppose India is selling the goods to USA. So now this becomes exporting of goods. So you have to put major focus on import and export. So imports are not separately included. So if we talk about imports, whether they are going to be included in value added method or not, so they are not included separately. If value of intermediate consumption is given, imports are not included separately, as imports are already included in the value of intermediate consumption. So if in the question or if any time intermediate consumption is directly given to you, at that point of time you will be not calculating intermediate consumption separately, or you will be not considering imports separately. Okay, because intermediate consumption will include all the imports. But if only domestic purchases are given to you, then imports will be included. If intermediate consumption is directly given to us in the question, well and good. But if it is not given directly, if they are writing it domestic purchase, then in that case you will have to add imports. Next, what about exports then? So even exports are not to be separately included in national income. So like import, export are also not separately included in the value of output if sales are given directly. If directly sales is given to you in the question, then you don't have to add exports. You have to consider that exports have been already inclusive in sales. But what if domestic sales is given? If domestic sales is given, then in that case, you will have to add exports. Okay. If domestic sales are given, then you will have to add exports. If they are not given, if they are giving you directly just the sales, then you don't have to look at domestic sales or exports or anything. But if domestic sales is given, then you will have to add exports to get the value of sales. Now you will understand these things more clearly once we start looking at the formula and once we start solving the numerical questions. Okay. But as of for now, just try to understand what is going on so that it becomes easier when we look at the formula and start solving the illustrations. So, imports, domestic purchases plus imports is equals to intermediate consumption. Domestic sales plus exports is equals to, it becomes your sales. What is value of output basically? So, value of output refers to market value of all the goods and services produced during a period of 1 year. Market value means market price. In the previous video, I have already told you all, whenever we use the term market value, it means market price. Whenever we use the term money value, that means it means factor cost. So here it is market value, that means we will be considering market price, the value of market price which is being sold in the market during a one period of year. So value of output is nothing but the total amount at which, or the total price at which the commodities are being sold in the market. So again, if we take the example of bread which was getting sold in the market for 500 rupees. So this 500 rupees is my nothing but value of output. Okay, and all the other will go under the category of intermediate consumption. All the raw materials, machineries, rent, whatever it is will go under the category of intermediate consumption. But the final price at which the product is getting sold in the market will be called as value of output. So now let us look at the formula. We already know now what is value of output. Now let us see how do we find out value added method, or how do we find out national income using value added method. So first, you have to find out the aggregate of value added method is nothing but GVA at MP. So it is nothing but GVA at MP. So GVAMP stands for gross value added at market price. Okay, so the formula is value of output minus intermediate consumption. We know what is value of output. Value of output is nothing but the total market value at which the commodity is getting sold in the market. We know what is intermediate consumptions. All the things like raw material, machinery, equipment, tools are nothing but my intermediate consumption. So that is how the main formula is. Now, there is a possibility that value of output might be given to you in the question directly. In that case, no problem. But what if it is not given to you directly? So for that, you again have one formula. So value of output is equals to sales plus change in stock. Okay, so if value of output is not given to you in the question directly, then for that you have a formula. Value of output is equals to sales plus CIS. CIS is nothing but change in stock. Now again, what if sales is given to you directly in the question? Then no problem at all. But if sales is not given to you directly in the question, then in that case, again you have a formula, that is quantity into price. And same goes for change in stock. If it is directly given to us in the question, then no problem at all. But if it is not given, then the formula is closing stock minus opening stock. Okay, we know what is closing stock, the stock which is left at the end of the year, and opening stock is the stock which is there at the beginning of the year. So, closing stock minus opening stock. Okay, so I hope this part is clear. Sales, if not directly given in the question, if direct word of sales is not given, then formula is domestic sales plus exports. Okay, if directly sales is given to you in the question, that means it is inclusive of exports. But if domestic sales is given to you in the question, then in that case you will have to add exports. Okay. Intermediate consumption, domestic purchase plus imports. If directly intermediate consumption is given to you in the question, that means it is inclusive of imports. But if domestic purchase is given to us, then in that case, you will have to add imports. One more challenge, that there are alternative names for everything. Like there are things which will have alternative names, which we will be talking about in our illustration video. Next, industrial classification of producing enterprise. So, one thing students, when we calculate national income using value added method, we are going to include primary sector, secondary sector and tertiary sector. Okay. So, primary sector, we all know primary sector is the sector which deals with extraction of all the natural resources. Yes. Secondary sector is the sector which will be converting raw materials into finished goods. Yes, raw materials into finished goods. And tertiary sector is nothing but your service sector which will be providing services to the people. Okay, so all the three sectors are included while computing value added method for national income. Fine. Next, very important thing. When you are calculating national income using value added method, what are the precautions which you have to take? So, if you remember, we have already studied that only and only final goods are considered while computing national income. We never include the value of intermediate goods. Why? Because if we include the value of intermediate goods, then ultimately it will lead to the problem of double counting. Double counting, once the double counting is done, the figure of your national income will no longer be accurate. I'll show you with the help of one simple example. We'll continue the same example. As I said, a seller who is selling bread for 700 rupees. He has purchased flour from the miller for 200 rupees. He has given, say suppose, he has made use of laborers and he has given wages to the laborers 100 rupees. Now you all tell me or you all reply me in the comment box which amount you will be considering while computing national income. Will you be taking 700 plus 200 plus 100 or will you be taking just this 700? Bread, remember, is a final good, whereas miller purchasing flour or a raw material in the form of flour from the miller is the raw material, and this is labor who is making use of his services. So, all of this will be the part of raw materials or intermediate consumption, and this is the final good. So, you all tell me, while computing national income, will you include 700 plus 200 plus 100 or will you be taking just 700? The answer is you will be taking only and only 700 because this 200 and 100 is included already in the 700. You don't have to include it once again. If you include it once again, then amount will be entered for the two times, which will not give you an accurate amount of national income, an accurate figure of national income. So that is why we always and always consider only and only the price of final goods. We do not consider the price of intermediate goods while computing national income. So, this is a very important precaution which you have to take while computing national income using value added method. Second, sell and purchase of second-hand good is not included in national income. So, any sell or any purchase of second-hand good will not be included in the current year's national income because that transaction has already been done in some year. For example, in 2018, I have purchased a mobile. Okay, I have purchased a mobile phone. In 2022, I am going to sell that mobile phone. So, when I purchase that mobile phone, that will be included in the national income of 2018 to 19. Again, if I sell it in the year 2022 to 23, again the sell should be included. No. Again, it will lead to the problem of double counting. So, because this is not a current year's productive activity, this activity was fresh and new in the year 2018 because at that time this particular transaction was done for the first time. Here, it's a second hand product, it's a second hand good which is being sold out again. So, now it is no more flow of current year's activities or current year's goods and services. So, we will be not including any sell or purchase of second hand commodities or second hand goods. Okay. But one thing to notice, any commission or brokerage charged on the sale of purchase of such goods will be included in the national income as it is a productive service. So, see, for selling this mobile phone in year 2022 and 23, I have hired one broker. This broker will become the link between me and the buyer. Okay. Now, this broker is becoming link between me and the buyer, but he will be not becoming a broker for free of cost. He will be charging some amount from me and some amount from the buyer. Okay. Nobody is going to do anything for free of cost. Remember, we are studying economics. Here, nothing is done for welfare, for social service. Here, everything, every transaction takes place for the profit motive, for terms of money, in terms of money. So, this broker will be the link between me and the buyer. This broker will charge some commission from me and as well as the buyer. So, that commission which is getting charged in the year 2022, that will be included for the national income of 2022 to 23, because that is the fresh transaction which is happening for the first time. So, remember, sale of second-hand goods or purchase of second-hand goods will never be included in national income of the current year, because that amount has already been included in the year where the transaction has held for the first time, when the transaction was new and fresh. So, in the current year, again, it will not be included. If we include it in the current year as well, then that will lead to the problem of double counting, which we do not want, right? So, we will not be including it in national income, but any brokerage or commission charged on second-hand goods will be included in the current year's national income. Third, production of services for self-consumption. Domestic services are not included. So, anything production of services which we are doing for self-consumption, for my own consumption, will not be included, and domestic services are also not included. Domestic services means what? Services of a housewife, services of a maid, kitchen gardening. All of these things will not be included in national income, since it is difficult to measure the market value. If your mother is working in a kitchen, can you take out a market value of her? That how much, what is the market value of my mother working in the kitchen? No. If your father is doing gardening, if he is watering the plants and sowing seeds and all, can you take out the market value of that activity? No. So, all the domestic services which are happening will not be included in the national income, because we cannot find out the market value of those activities. These services are produced and consumed at home and never enter the marketplace and are termed as non-market transactions. Why non-market transactions? Because these domestic services or these domestic activities are not going to enter into the market. All of these things are happening internally at our home. So, third point, production of services for self-consumption will not be included. Next, production of goods for self-consumption will be included. So, remember, we are talking about, there are two things: production of goods, productions of services. So, for services, it will not be included while computing national income, because it becomes difficult to find out the market value of those services. Okay. And for goods, if we talk about goods, self-consumed goods, then that will be definitely included under national income. So, in national income, they contribute to the current output. Their value is to be estimated or imputed as they are not sold in the market. Imagine self-consumption. If I am producing crops, but I am not selling those crops in the market, I am producing the entire crops for myself. I am only going to consume it. So, how this is going to be included in national income. But how are we going to include it in national income? Because these crops are not going out of my house, only I am consuming it. Then how are we going to include? So, this will be included on an estimated basis, which is also called as imputed. Imputed is nothing but the imaginary value. It is not the actual market value. It is the imaginary market value for that commodity. So, imputed value of owner occupied house should be included. Imputed value, as I already said, it is nothing but an imaginary value. Okay, that is not an actual value which has been actually happening. It is just an imaginary value. So people who live in their own house do not pay any rent. But obvious, if I have bought one house and that house completely belongs to me, okay, it completely belongs to me, why would I pay rent? No, definitely I will be not paying rent because that house belongs to me. So they enjoy housing services similar to those people who stay in the rented house. But there are few people who might be staying in the rent house. So here there is one more house. Here the person is staying on rent and the rent which he has to pay is 500 rupees per month. Okay. Here there is one person who has his own house. He doesn't have to pay any amount of rent. But here there is another person who is living in a rented house. So, value of such housing services is estimated according to the market rate of similar accommodation. Such an estimated rent is known as imputed rent. So, for say suppose this also has one bedroom hall kitchen, this house also has one bedroom hall kitchen. So, the rent of this house is 500 rupees which will be included in the national income and this is the actual value. Okay, actually the person is paying rent, but here the house is occupied by the owner himself. So what we will do, how we will find out the value of rent, because he is not paying any. So here what we will be doing, here we will be estimating the price, that if this person living in the same locality, same surrounding, same kind of house is paying 500 rupees per month, then even this person would have paid 500 rupees per month if he would have lived in a rented house. So, this 500 rupees becomes your imputed value, imputed rent. That is, it's an imaginary rent. This is not the actual rent. Whereas here, this is an actual rent which the person is paying. So, imputed values or imputed rent are always included while computing national income. Next, change in stock of goods inventory will be included. So yes, we are already including CIS, that is change in stock. So net increase in stock of inventories will be included in national income as it is the part of capital formation. So CIS will be there in the value added method. Production for self-consumption. Now, goods produced for self-consumption are included in national income. All the final goods produced within the country are not necessarily sold in the market. So, all the commodities, all the goods which are being sold within the domestic territory, not necessary that all goods will be sold in the market. Remember here, first of all, we are just talking about the goods. So, not necessary that all the goods which are being produced in the market will be sold out in the country, in the economy. So, there are few amount of goods, few amount of things which might be consumed by the producer itself. Example, farmers keep a major part of their produce for self-consumption. Imputed value of such goods is included. For example, a farmer has produced 10 kgs of rice, okay, out of which 5 kg he is going to keep it with himself and 5 kgs he will sell in the market. So, this 5 kgs is kept for self consumption and this 5 kg will be sold out in the market. So, what we will be considering, what will be the amount which we will be considering? Are we going to include only the 5 kgs which we are selling it in the market, or are we going to include the entire 10 kg? So, the correct answer is we are going to include entire 10 kg. Say suppose the 5 kg rice which the farmer sold in the market costed him rupees 1000. So now here also we will consider that if at all the farmer would have sold that 1000 rupees, sold those 5 kg of rice also, instead of keeping it for self consumption, he might have gotten 1000 rupees. So this 1000 rupees as well as this 1000 rupees. Both the 1000 rupees will be included under national income. This will become your actual value, and this is nothing but your estimated or imputed value. We are finding out the market price of imputed value by estimating it or comparing it with the product which has already been sold in the market, right? This 5 kgs has already been sold in the market. On the basis of that 5 kgs, we are going to consider the value of the 5 kgs which the farmer has used for self-consumption. Okay, so any goods which is kept for self-consumption, we will be finding out its imputed value and we will be including it in national income. Now, what about services? What about the services produced for self-consumption? It will not be included in national income. Like services like housewife working in her own house, doctor treating his own child, teacher teaching his own child will not be included in national income, since it is difficult to ascertain their market value and such services are not rendered for the purpose of earning income. So, all the services which the people are giving for self-consumption, like if the teacher is teaching to his own kid, if a doctor is treating his own kid, if a lawyer is fighting for the own relative, then in this case it becomes very difficult to find out the market value of these services, and hence we chose or we prefer not to include the value of all of these services which is produced for self-consumption. Thank you for watching our video. For more updates, reach us on www.tgcampus.com or 1800-267-2677 or connect@tgcampus.com. Like and subscribe to our YouTube channel TG Campus In. Follow us on Instagram, Facebook and WhatsApp. Join our official Telegram channel TG Campus In. Chat with us on 8655682401.